and welcome everybody to this next session brought to you by Amplify. We have an exciting one all about alternative capital, and this example is all about Wefunder. We've had a handful of companies in the Louisville ecosystem that have joined this pretty revolutionary platform to raise capital through their communities. 2021 brings some pretty interesting SEC news that hopefully Johnny gets into, but it's really important for everyone to learn these things and understand that there's a lot more options for you now with these changes into getting your startup funded and going and up and running. But today we are joined by a pretty awesome panel. Jessica Bledsoe of Paver. We have Jim Higdon of Cornbread Hemp CBD. And we have Charlie Miller of Unautonomy, all awesome Louisville startups that have been doing great things so far. And we are moderating today. We're lucky to be joined by Johnny Price of Wefunder. Johnny will be moderating this entire panel, but we've got some exciting conversations ahead, so we'll go ahead and dig right in. Johnny, the mic is yours.
Awesome. Yeah, thanks so much, Michael, for setting this up. Really stoked to have so many people here. And like Michael said, I lead the business development team at Wefunder. So we're an investment crowdfunding platform based in San Francisco, trying to make it easier for startups to raise capital. We do 50K to 5 million. I've been here for 3 years or so. Before that, I worked for a nonprofit called Kiva.org. I led their US team for 7 years. Actually, also working in partnership with Access Ventures in Louisville, it's cool. And before that, in management consulting and from the UK originally, which explains the accent and why I'm confused when people talk about the UK sometimes. So that's me, and but I mostly want to focus on the three founders on the call who have all conducted or are conducting Wefunder campaigns, so can tell you the unvarnished truth about their experiences using regulated companies and capital. We'll obviously focus on Wefunder, on regulation crowdfunding. You know, there might be opportunity to get into other forms of alternative capital as well. We'll probably aim to have a panel discussion for about 30 or 40 minutes or so, and then leave some time for questions from the audience at the end. But we have a list of questions to ask the panel, so I'll get started on those. I guess as a starting point, would be great for each of you guys to introduce yourselves and the companies you're working on pretty briefly. Let's go in alphabetical order. So Charlie, you wanna start with you?
Sure. So I'm the founder of Unautonomy. We're a Louisville-based startup. We are focused on augmenting communication for companies to help them improve their work culture. Our main product right now is Org Vitals. It's a way to assess the company culture and to understand what to improve and how employees are feeling about everything. I started Unautonomy about 1.5 years ago and self-funded it through the first stretch while we were building things and starting to build relationships with some investors. Knowing that spring of 2020, we would do a fundraise, kind of a pre-seed to kind of give us everything we wanted to have as we went to market and to really fuel things through that period where you're trying to get your first customers and market things early as you find product market fit. Well, literally on the first day the market crashed related to the pandemic was when we got our first checks in. So like couldn't have been worse timing. And we basically realized, luckily we had just about raised half what we wanted to raise, about 250K. And we thought, well, let's not spin our wheels trying to get more people to write checks right now because things are crazy. Let's really just focus on the products and doing what we can here. And knowing that in maybe 6 months we'll restart things. And Wefunder became kind of a perfect avenue for us to take a wider approach instead of just talking to a few people around town in our networks. We could, get people all over the world to write smaller checks, but at scale. So we really warmed up to the idea of Wefunder, and I'll talk about that obviously more.
Who's next? Is it me?
Johnny, we lost your audio, but yeah, go ahead, Jim.
Oh, sure. Thanks. Appreciate it. So I'm Jim Higdon of Cornbread Hemp. I'm co-founder of Cornbread Hemp. I'm a former journalist who jumped into the consumer products goods space with the CBD hemp company with my business partner and cousin, Eric Zipperly, who just stepped out. We started this company at the end of 2018, a product launch 2019, became the first Kentucky CBD brand to introduce CBD products that were USDA certified organic this time last year. At the same time, we had been courting local investors for a standard Reg D filing or fundraise, and having trouble getting there, in part because we were a version 2.0 hemp company. Hemp companies came online with the first set of legalization efforts after the 2014 Farm Bill. And so after the 2018 Farm Bill, when we came online, the Louisville investor class had kind of been tapped out on hemp investments, CBD investments from other companies who came before us with less amount of success than we are currently experiencing, just because of the nature of the hemp ecosystem. So we were having trouble with fundraising in a traditional sense, closing out 2019, and had settled on crowdfunding as an option for ourselves. As we started this year, we had thought about going with a competitor platform. And as we were moving towards launching that campaign on a competitor platform, someone in the Louisville ecosystem, in the startup community, actually Larry Horn at Leap Louisville, said, why are you doing that platform? Why not Wefunder? Wefunder has this partnership locally with Access Ventures, with Render Capital. And that was the first we'd heard of that. We switched gears immediately this is, I think, late February, early March. And then right as the pandemic hit and the lockdown happened, we realized we had an opportunity to go ahead with this crowdfund, despite the volatility in the stock market, and launch the campaign on the 2nd of April. And it was just really a runaway success for us, with the help of Render Capital locally, matching our first 20K investments. We were able to raise 50K in our first day and 100K within 17 days. We opened up our investment from 100K to 400K. We met that goal at the end of October. And so in addition to our angel investment round that got us started, we've raised 500K total as of today. And that's in a large part due to the success of our experience on the Wefunder platform. We have over 900 investors now. Most of those are in the United States. We've converted a good deal of those investors into customers, which is an incredibly important part of this process. Wefunder's been incredibly, it's been just really a great way to integrate our customers and our investors together, and increase our customer base, increase our reach. California is now our #1 state in terms of revenue. That's in large part because of the investors we met in California as part of our Wefunder campaign. So it's just been a really great opportunity for us. We're a sort of an odd bird as a startup in Louisville. Not only are we a hemp company, but we're a consumer packaged good company. So we're not tech, we're not an app, we're not healthcare. So it's been really great to be able to tap into a much larger potential investor pool that Wefunder offers, because locally the investor class didn't quite know what to do with us, mm-hmm. and the ones that would have dealt with this had already invested in hemp and had moved mm-hmm. on. So that's the basics of our Wefunder story.
That's awesome. Thanks, Jim. Jessica?
Yeah, hi everyone. My name is Jessica. I'm the co-founder of Paver. Paver is your path to productivity in Google Calendar. Our goal is to really help you understand how you're spending your time so you can make better decisions about how you spend your time. I think it's especially important when so many of us are working from home now and there's no break between what's work and what's home. And so understanding how we're spending our time. My husband is my co-founder. We owned a technology company here in Louisville as a service provider. We are Google partners, helping small businesses primarily migrate to Google Cloud and Google for Work. And through that is where we really came up with the idea for Paver. And we were basically bootstrapping Paver with the profits from that service-based business. And then COVID happened. And so we knew that we were going to be fundraising, but it looked like it was probably 6 months to a year out before we would actually have to do that. But then with COVID, a lot of our clients were in the hospitality and transportation industries, which were obviously hit the hardest. And so several of our contracts came to a halt, and we didn't have the funds to bootstrap anymore. So we were trying to figure out what we were going to do. Were we going to put Paver on hold, or were we ready to start fundraising? And when I first heard of equity crowdfunding, I kind of wrote it off because we were a technology company. In my mind, I thought that, to really be successful on a platform like this, you needed to be product based. And so I just really didn't think anything of it. But as we were talking to our clients and our friends and our family, there were several people who said that they would be interested in investing in us to help us continue our growth, but they were unaccredited investors, or maybe they had never invested before. And so that kind of made me think of Wefunder again, because I had been introduced to them through Render Capital, and I knew that they had that match as well. And I was like, well, I feel pretty confident that I can get, enough money to get that match at least. And so we hooked up with Johnny and then with Justin, and got our campaign going, and we've raised almost 70,000 on Wefunder, and really 90% of that has been from our friends, family, clients, local community, some of our Paver users as well. And then we also won the Kentucky, or the KY 270 pitch competition, which gave us another $30,000 investment. So we're almost at the $100,000 line. Our goal is 250 for this round, and I feel really confident that we'll get there. And Wefunder has been a fantastic platform to help drive people to that investment. Instead of them writing me checks, it just lays out the process so much better than I would have been able to myself, and I think gives them the confidence they need to invest. And then I don't end up with 100 or 900 different people on my cap table. I just have that one line item. So Wefunder is working out great for us, and that's kind of how we ended up here. If it hadn't been for COVID, we probably would not have gone this route, but I'm actually really glad that we did.
That's awesome. So maybe we could go in reverse order for this question. I mean, and you kind of have all touched on this a little bit. We'll be curious about the experience kind of practically of running the campaign. So, from the setup to and executing on the campaign, what did that process look like? How did you go about raising the money? Like, what kind of tactics were you employing to raise the money? You want to go first, Jessica?
Sure. So when we got started, we were given a list of here's everything we'll need done before we can actually launch the campaign. So we got started on our convertible note. We actually already had a convertible note drafted from our attorney.
So on that, so you knew that you were going to raise with a convertible note, and then you just kind of plug that up on Wefunder, as opposed to being unsure about what instrument you'd be raising on at the start of the process.
Yeah, we knew that we were going to do a convertible note. We went back and forth a little bit. Should we just do a safe instead of the convertible note? But we already had the convertible note. We were happy with what was in that note. And we really wanted to give our early investors that added incentive that was in the convertible note as well.
Can I just touch on that, actually?
So we just ran it.
Because on the Wefunder side, that's a nice just point to emphasize. So sometimes folks will come to us and say, hey, should I raise on a convertible note or a revenue share, or what instrument should I use? And we can certainly provide some guidance and advice on that, but generally we don't want to be in the business of that, because we are never going to know Paver as well as you and your advisors and an accelerator that you're working with, or investors in the company know Paver, right? And so our expertise is like as a crowdfunding platform, not so much like structuring an investment for your company. And so in an ideal world, from a Wefunder perspective, founders are coming to us and say, okay, I'm doing a convertible note at 2 million cap, a 20% discount rate. And then we can just take those terms as with Jessica, and then put it up on Wefunder. So anyway, sorry to interrupt.
No, that's okay. But yeah, we kind of already had in our mind what it was we wanted to do. I will say though, just having Justin, who's my account manager with Wefunder, having him to just kind of say, this is what I'm thinking. Does it sound right? And just having him kind of validate that, yeah, we're on the right track with that. That was really helpful. And if we hadn't already had that convertible note, you know, Wefunder has templates for convertibles and safes that you can use that are a great place to start if you haven't already invested in having your attorney draft your note. So we had our note, we added a few things to it, and then really it was on the profile. So I mean, your profile is really what people are going to learn about your company and why they should invest in you. And if there's anything I could say, however long you think it's going to take you to put your profile together, like double that amount of time, because once I thought I was done, I sent it off to Wefunder and they came back with some really great feedback on that and things that, you know, I could add in or I could change, just things that would make it more clear. Because when
what kind of stuff?
Mostly about how I was communicating what Paver did, and in my mind, because I'm the one who's built it, I just make assumptions that people just know certain things already. And so there were just some clarity points and some breakdowns about what Paver does and who our customer is that I hadn't included in my initial, or I just kind of skimmed over it. I didn't really go into detail. So they gave me some feedback on how I could craft that a little bit better. And I was actually working with a designer to do my deck. And so I was kind of communicating between the two of them as to what needed to be done. But it did end up taking longer than what I had expected. So I would just say, give yourself some extra time. And then when we launched, I mean, I knew for about 6 weeks before we launched that we were going to be doing Wefunder. So I was kind of priming who I thought my investors would be, reaching out to them either through email or just saying, hey, can we catch up over a Zoom call, and letting them know what I was doing. Pretty much all of them were aware of Paver already. They had, like I said, most of them were either friends, family, or clients.
How many people were on that list? How many people did you kind of reach out to and say, hey, you know, would love to chat about this?
It was over 100. I would say probably about 120 or so.
And how many conversations?
Oh God, I probably had about 50, like in person, either virtual or in person meetings, and then probably 24 more kind of email exchanges.
And of those 50, of those 50, how many invested?
20 to 25 of them. I got my lead investor out of that though, which was the biggest, and that was a $25,000 lead investment. So that was huge, and that really just came from, I mean, for her, I've been talking to her for about a year, in terms of, you know, we're going to be raising, this is what our plans are. And then it was like, okay, here's what we've decided to do. I need a lead investor to be able to do that. Will you be my lead investor? Got her on board, and then being able to talk to other people and say, I've already secured my lead investor. Here's what we've set the terms at. And a lot of my investors had never invested before in this capacity. So I really had to help them understand what Wefunder was, what the convertible note was, what the terms in the convertible note was. Like, I started this process knowing almost nothing, and now I feel like I know so much, and it's been such a huge learning process that I know is going to serve me even as we do go on to do larger raises that might not be on Wefunder. Or
that's awesome. As the like BD guy at Wefunder, I like it when founders on Wefunder pitch Wefunder much better than I can pitch Wefunder. So last question. So you have the this is great on the kind of setup for the campaign. So we've got like setting the terms, okay, convertible note, what's the valuation cap discount, getting that investment contract done. Got putting together the campaign page, allow kind of more time to do that, you know, feedback with the Wefunder team. We've got doing outreach to, you know, those kind of 120 people that you mentioned, 50 phone calls, like get their feedback and line them up to invest. We've also, there's financial requirements that you need to do as well. Gap format financials. If you're raising more than 250K, you need to have those financials reviewed by an independent CPA. If you're raising less than 250K, you still need the financials, but they don't need to be reviewed by a CPA. That is usually the one cost that you incur before launching a Wefunder campaign. And then there's what's called the Form C filing, so using Wefunder software to fill in a bunch of legal disclosures and risks as well. But so with all of those things, last quick answer from you, Jessica, and then we'll get to Jim and Charlie. And you also mentioned the lead investor, which is an important step, and I want to ask Jim about his lead investor. But that process of kind of when you first engaged with, I think it was me that had the initial conversation, or our team, to launching the campaign. How long did that take?
I think it was about 6 weeks. It was pretty quick. It was definitely no more than 8 weeks. And it probably could have been done quicker. Honestly, it just took me a little while to wrap my mind around everything that needed to be done. We were fortunate though, our financials were really easy. I mean, we were basically brand new at that point. So it didn't take long for our financials to be put together. And then Wefunder actually put me in touch with the CPA who did all of that. So that was really nice that I was able to find someone who had been through that process before.
Usually, 6 weeks is kind of typical. Sometimes we can shave some time off that. Usually it's the founder's bandwidth to put together the campaign page that's the long pole in the tent. We can turn things around pretty quickly usually, but usually what's delaying the launch is the financials. So if, for example, you have super complicated financials that are in a mess, you need a CPA to do a review of those. That's what can end up taking longer. But that's super helpful overview. So maybe Jim, transitioning to you.
Sure.
Can you talk about your lead investor, who that was, how you found them, and then maybe transition into a little bit more and then executing the campaign, what you did to raise the money for Cornbread Hub?
Well, I'll take those backwards, because we did not have a lead investor out the gate. We designated a lead investor on the fly after the fact, and changed our modified our Form C as a result. Also didn't have reviewed financials out the gate. Turns out finding a CPA in tax season to do these sorts of things on in our time frame was difficult. So we started the campaign without a lead investor and without reviewed financials. And then once we got to 100K, we submitted reviewed financials and our lead investor, who is Gil Holland, who's a local developer and producer in town here in Louisville. I've known Gil for 20 years. So he's a friend, and I knew that he would be interested. So we approached him to be our lead investor. He's a lead investor at 5K. We didn't have any individual investor over 10K, I don't think. Render is our largest investor at 20. So we were able to cobble together 400K from investors at relatively modest amounts. I think our average investment was about $500. Minimum investment for us was 100. So we were able to piece that together. Part of the reason to have a lead investor for these convertible notes is to keep the cap table clean, which is something that we learned along the way that was really important for later rounds of fundraising. Next generation fundraisers don't want to see a big messy cap table with several hundred investors on it. Having a lead investor with the convertible note on Wefunder allows you to roll all that up into one line on the cap table. That's been very important to us.
Just to double down on that. So this is something which, if we'd had this panel a year ago, Wefunder was a lot less interesting of a product or a way to raise capital for founders, because we could not roll individual investors up onto one line on the cap table, which made my life very hard. But earlier in 2020, around the start of the pandemic, actually, we, as Jim was mentioning, we use a custodian structure now. So if you have 200 investors in the campaign, we roll them up onto one line on the cap table, which is the custodian. The lead investor votes for the individual investors in the custodian. So you, in the event of a follow-on financing round, you just have to collect one signature from the lead investor as opposed to 200 from the individual investors. So it's actually better for investors because they now have kind of representation in kind of later rounds, but also it's much, much better for the founder because it's just one line on the cap table. And so Wefunder's been growing very, very quickly this year. We're about 5x up in Q4 2020 over Q4 2019. And I think that product change to one line on the cap table, maybe combined with the pandemic, is two very important reasons for that. But sorry, Jim, back to you.
No, it's a huge piece of what Wefunder offers founders is a clean cap table for the crowd fundraise. It's vital. A competitor to Wefunder told us before we switched to Wefunder that we should just embrace the messy cap table. That was just a reality that we had to accept. And that wasn't something we wanted to hear, which was great because we didn't have to hear it because we switched to Wefunder. And now we've got a lead investor and a custodian structure in one line on the cap table when the note converts. So that's incredibly helpful and vital. And in terms of creating the campaign, the other piece of this that that people getting into this should be mindful of is regular updates of the campaign and making those video updates. And you don't have to have Hollywood style production techniques and quality, but it needs to be good and clean. And you need to have someone on your team who knows how to do video, because you're going to be doing regular video updates that are going in email and online to not just your investors, but people who might be investors.
So to dig on that, so can you give a couple of examples of what you included in those video updates, and then what did you do with the content once you had it? How did you ensure that people saw those updates?
So the updates were really organic in terms of, okay, this is what's happening this week. Here's some wins we've had in the business. Here's some numbers from the month. Here's this press earned media that we just got. For instance, over the summer, I was interviewed in a Forbes magazine piece that was the subject of one of our summertime updates to give our investors and our followers. So Wefunder has this. Wefunder will send emails not just to your investors, but people who are following your campaign who have not yet invested. And so these emails go when they post onto Wefunder to not just your investors, but people who might be investors. And really, we kept it inside that silo. They were on our YouTube page because we were using the YouTube page to upload it to our Wefunder profile. But really, it was sort of contained inside the Wefunder ecosystem. It didn't really go out to customers directly or onto our social much, except for the occasional social media push.
Yeah, and just to say a couple more things on that. So I'm looking at Jim's Cornbread Hemp followers page right now, and he had 805 followers on Wefunder who had expressed an interest in investing through the site, as well as 870 investors. So it's kind of double the audience. And I love what you said. I think it was the Forbes press that I would highly recommend that. I think people sometimes kind of post updates like, oh, we just passed 100K. That's less interesting, I think, to investors than to say, hey, we just had our biggest month for revenue ever, and here's a chart that's up and to the right. Or we just did this analysis of like user engagement on Paver, and it turns out that our churn rate is down 20% because we made these product changes. Or we got featured in this press, or we just hired this awesome engineer. Those updates around the business, I think, are really kind of interesting to people. And I want to bring Charlie in because, Charlie's been listening to these guys, but I'm sure, like me, you've been fascinated in what they've had to say. Maybe from your perspective, talk about some of the, you've kind of considered or raised money in other ways as well, versus Wefunder. Talk about some of the pros and cons in your mind of like using regulation crowdfunding, using a platform like Wefunder to raise capital. Sure. And also, is there anything you wish you'd known, coming into the campaign that you could share with anyone that's considering this?
Yeah, so I was a skeptic, and it was a lot of things Jessica mentioned. I didn't want a messy cap table. And at the time when I first looked at this stuff, that wasn't solved. And I talked to another startup locally that had that messy cap table, and it just sounded like an amazing headache just for communication purposes with regular investor updates. Let's see. So yeah, I was really skeptical when I was starting Unautonomy. I was kind of thinking back to how we raised money at my last startup, and assumed we'd kind of follow a similar playbook in the early stages. And so, I started cultivating relationships long time in advance, even for what we wanted to do in the spring. We knew we wanted to use a safe. And honestly, locally, Kentucky, most investors here hate safes. So we kind of went in eyes wide open that we're going to make it even harder for ourselves by using a safe, but we think safe's the most fair thing for founders at such early stages. And luckily we have some networks on the coast where safes are kind of the normal terms. So we were able that were willing to come in. Now, the funny thing is, though, like while we got those people on the safe, we didn't know the pandemic was about to happen. And then once that happened, you know, like I said, we kind of had to pause everything. And Wefunder became an interesting solution because I learned two things. One was, yes, you solve the 1% of the cap table, the messy cap table. The other thing is I could just roll the same safe note right into Wefunder. So it's the same safe round, the same terms and everything. It's just basically the same round. And that was awesome for us to be able to go from one moment to the next and basically not have to rethink anything related to the terms or renegotiate anything or anything like that. So Wefunder became very interesting to me. I know locally there's a champion of equity crowdfunding name, I think Alan Groschier, and I found his blog years ago, and he's who first got me interested in this path. But like I said, I was a skeptic because of some of the messiness with the cap table stuff, and you know, could you even do a safe on it? You know, icing on the cake is also, of course, the render 20K. And if you saw in the comments, Mary Grace put her contacts out there so anyone can contact her with questions. But you know, basically, I didn't even shop around for what system I would use the equity thing on because I already knew the Wefunder, had the relationship with Render. I knew Render and trusted them. I went to the panel, I think that was maybe in January, where I kind of learned about some of these updates and realized it might be an option if and when I need it. It turns out we did. So that was great. I think something that worked well in our favor, though, is because we paused our efforts around raising money on that safe with the pandemic, I was still obviously cultivating relationships along the way. So anytime an investor kind of knocked on my door and wanted to know about getting in, I basically told them to hold off. I think we're going to do this Wefunder thing, and I'll come back to you when the time's right. So in August, when we got everything ready to go, I was able to circle back to all those people that had reached out one way or another, and his friends and families and strangers and everything in between. And I used that to kind of get a lot of momentum for us on day one, which was nice. In terms of things I wish I knew, it definitely took more time than I anticipated just to get the whole campaign ready. And that's probably obvious at this point to anyone listening to these stories. But, you know, I kind of expected it to take, you know, anywhere from, I don't know, 2 to 4 weeks. But I think it ultimately, when you think about actually cultivating the relationships, be ready to invest on that day one to get your campaign that initial momentum. You want to start that stuff 6 months out probably. Then the actual blocking and tackling of getting the campaign ready, from the Form C stuff to the accounting stuff that Johnny's talked about, I would allow probably 2 months to get that process really solidified. And then you kind of pull the trigger whenever you want on the campaign. And I think the other thing I would say is, like, now that I've done it once, I would love to do it again. I wouldn't even raise money on the safe outside of Wefunder. You know, that was $250K that I would have loved to have just started on the Wefunder thing to have all that extra momentum going here. And talk about lead investor. I have a great lead investor for us right now through Wefunder, but it was strategically picked him because he's a technical friend who's a previous founder who really knows both sides of investing and being a founder. So he's perfect to handle communication and have the voting rights for the group. But he's not someone with like a vast network to pull in more investors on Wefunder. And part of me wishes I'd known that, to actually have that right person who has that network to pull in a bunch more people to invest. That would have been smart for us in retrospect. But yeah, I think that's kind of the main things.
And just to 100% agree with what you just said, and this is kind of related to, I think it's Charlie's question, or Gary's question that he just asked in the chat, which I tried to answer. But you can do a parallel. You can do Reg D, and probably should have said this at the outset, right? But so Regulation D is how most startups raise capital. Today, with Regulation D, you're limited to raising from accredited investors only, so millionaires and billionaires, and then B, or institutional investors, and then B, you're limited to privately soliciting investors. And one of the things that I think is really cool about regulation crowdfunding, which is what we do at Wefunder, is that it changes both of those things. So now you can publicly promote the offering on social media, in the press, by sending an email blast to your customers or your LinkedIn connections. And also, you can raise money from unaccredited investors as well as accredited investors. So in those two ways, I would argue we generally make it easier to raise money, because whatever could come in a Regulation D can still come in. but now you can also raise from those additional pools of capital as well. So, but to Gary's question, you can run a Regulation D campaign either in series to a Wefunder campaign. So you can run a Reg D first and then do a Reg CF, which sounds like it's what Charlie did with Unautonomy. You can actually also run it in parallel. So if you use an exemption called Regulation D 506C, that allows you to publicly solicit investors, which is what you're doing on Wefunder. So you need to, if you're running it in parallel, you need to make sure the Reg D is a 506C. But what we would recommend, as Charlie mentioned, is that you concentrate both the accredited investor, angel investor checks, and the retail unaccredited investor checks in the regulation crowdfunding rounds. Because, as Charlie was getting at, if that 250K comes in on day one of the Wefunder campaign and you come out the gate with this like 250K momentum, then that's going to mean that anyone that sees the social media post and clicks on the campaign, then there's more social proof, there's more credibility, they're going to spend more time looking into it, and you'll get a higher conversion rate. And that's also true from Wefunder's investor base as well. So generally, we recommend kind of grouping it together. Now, you do pay a fee on the money you raise on Wefunder. So our standard fee is 7.5%. But with kind of referral partnerships that we have in Louisville, if you get referred to us by Render Capital, for example, and Mary Grace is on the line, she's awesome. And by the way, like the matching partnership we have with Render is awesome. So, the fact that they are matching, I think it's the first 20K from the crowd out of their fund is really, really cool. And I think a big part of the reason why we're on this call and there's some traction going in Louisville here. But anyway, with the Render Capital referral, you can get it discounted down to 6.5%. But still, then it's like, well, if I could raise 250K anyway, why would I want to pay the 6.5% Wefunder fee on that 250K? So this is where we actually waive those fees for checks of 25K or more that come in. So if you bring a check of 25K that you would otherwise have taken in Regulation D round, then you don't pay any Wefunder fees on that. So that's why and for you, as I mentioned, it generally makes sense to try to have this come in through the Wefunder campaign to build momentum. So maybe just one more quick question to Jim and Jessica. And then we'll open it up. There's been some great questions. I've been trying to answer them in the chat, but maybe if you do have questions, just to make it easier logistically, if you could put them in the chat, especially if there's questions for like the panelists that they could answer more broadly, just put them in the chat and I'll walk through those. But last quick question, maybe let's start with Jim and then Jessica. As Charlie said, like a lesson that you wish you knew, or some advice that you might give to a founder on this call who's considering launching a campaign, a regulation crowdfunding campaign?
I'm kind of stuck as to something that I wish I would have known going in. I mean, it took more time than we thought. There was definitely a relationship building aspect of this crowdfund that we didn't anticipate that ended up being incredibly rewarding and positive for the business. It remains incredibly rewarding and positive for the business. But it's something that we didn't anticipate needing to nurture and cultivate. And that took time. That took time every week to make sure that we, in the course of the campaign, were mindful of our investors and our followers and building momentum on the campaign. Like, where were we on the campaign? Where are we going? Like, when it felt like we were getting stuck, it caused anxiety in the business. Like the crowdfund is an animal that needs to grow. And if, it takes some energy away from core functions of the business to keep a crowdfund going. And so that, that was some, energy that took from our business, but we still managed to grow the business month to month, quarter to quarter, while keeping the fundraise open. But the fundraise did take some attention away from everything else we were doing. And so just, to be mindful of that going in and doing one's best to plan for it so that it doesn't take you off your game and make it feel like a burden, because in the end, it's an incredibly rewarding aspect of having concluded a crowdfund, because we've got I don't know. I think we ended up with just shy of 900 investors, which is an amazing pool of people who are committed to our project. And a lot of them started as customers who became investors. Some are investors who have now become customers, and they're a pool of people who are part of the team, part of the squad, part of the family of the company. But that took time to create and to build and to nurture. And so be mindful of the time commitment that it's going to take as your campaign extends from 1 month to 2 months to 6 months. Our campaign was open April to October, so we had a long time to nurture those relationships, and it took time.
Jim, that's great advice. This definitely takes time. Fundraising, I think however you raise money, generally it's taken time, a lot of meetings, probably a lot of no's, putting together the materials, etc. So that's great advice. I want you to talk, before we get to Jessica, on lessons and advice on that point that you mentioned, because this is one of the things that really excites me about Wefunder, is that if you have 870 investors in Corn Bread Hemp, I hope that that's 870 customers, champions, brand ambassadors. Can you give maybe a couple of examples? Like what you said earlier about California now being your biggest market, that was pretty amazing to me. Are there specific tangible things that you can point to, or is this just a general sense you have?
Well, in terms of California being our number one state, I mean, that came out in the wash in our November revenue numbers, and it's through the holiday season continued to be just like we just resonate really well.
Well, I guess I mean, like, are there specific investors that invested in the Wefunder campaign who live in California, and you've like built a relationship with them, and you've seen, oh wow, like, are there specific examples of where your investors have added value or become your customers, or is it just a general kind of impression that you have?
It's more general, because the customers that we've created from our investor group are not. We didn't land any large retail accounts through investors. They're all just personal investors and personal customers. So they just like in the aggregate become revenue in the month. We don't have any superstar investors who are superstar customers to my knowledge. They're just customers, and our average order value is $120, give or take. And we need to grow those numbers every month, and our investors help us do that. But it's just a matter of adding to our customer base with committed people who are literally invested in the product and the process. The one thing that we could not do on Wefunder, because of the nature of our company as a CBD brand who sells full spectrum CBD products, is that Wefunder allowed us to gain a number of investors who are international overseas, but we can't ship products outside the United States. So that modestly limited the reach of our ability to convert our investors to customers, because we can't convert our Canadian, our European, our Asian investors into customers, because we can't ship products there.
Got it. And so just building on that whole kind of customer piece, just to tie that into something to think about for anyone considering launching a Wefunder campaign, do think about that coming in, right? See this as a marketing campaign, see this as a customer acquisition and engagement play, seeing it as a way to build relationships with a community of people that are now going to be owners in your company. I think if you see it coming in as not just a way to raise capital, but also a way to build an army of champions, then you will end up both probably raising more money, but also getting more value out of this way of raising capital. Jessica, what about you? A quick kind of lesson for someone considering running a Wefunder campaign?
Yeah, I mean, I would just echo, give yourself more time and start cultivating those relationships well before you actually launch the campaign, and really think about the marketing strategy that's going to be implemented during the campaign. One thing I wish that we had done beforehand was taking into account digital ads and connecting with a partner for digital ads before we actually launched. We are going to be extending our campaign. It's supposed to end on January 15th. We're going to extend that with the holidays. It's just been really difficult to get people on the phone and continue those conversations. So we're going to push that out a little bit. We're going to start doing some more digital advertising type things, and have really kind of redone our whole marketing strategy to give us a good push towards the end of that campaign. And I just wish I'd been a little bit more aware of that before it started. We launched in October, and I really didn't even take the holidays into consideration, and I wish I would have, so that I could have planned for that a little better. But I talked to Wefunder literally just yesterday. We're going to just push the campaign out a little bit, and then we'll ramp back up beginning of January and take us through the end of the campaign with an actual strategy in place now, instead of just kind of winging it.
Awesome. Mike asked a really good question. What is the average spend on a campaign? And I think it would be cool to answer that question just by you guys, just talking about how much you spend and all the fees and Wefunder fees and any, accountants or lawyers. You want to start, Charlie?
Yeah, because I think I can also reference what Jessica was just saying in terms of like timing and running a campaign. One of the great things about Wefunder is the flexibility to kind of figure out how long you want your campaign to run. We, after our initial kind of success in like week 1, based on all the things we've been cultivating, we took the pressure off. We decided we're actually not going to push the campaign at all. So we haven't spent a penny on advertising, and we really haven't promoted it much, because like we were lucky to actually win the render competition here and get more money in. We kind of had the money we wanted to raise at this point in time, but we went in and extended our campaign with Wefunder to kind of figure out, well, we don't know what's going to happen this winter between where we have our products and what's kind of going on in the world. Let's give ourselves some extra sort of time on this campaign. And that way in January, we can kind of reassess everything. And if we want to start a marketing campaign for the Wefunder campaign and really target certain investors, we can do that. So we've given ourselves a lot of flexibility. And that's neat about Wefunder, to have that flexibility. In terms of all the other costs, I don't think we spent hardly anything, to be honest. Because I have a partner that's like got a legal accounting hat on for us, and he can kind of help me go through all of the moments of figuring out the Form C stuff and working Wefunder across all the accounting pieces. So I think we're pretty lucky. I can't think of anything we've actually spent money on. And I should also plug Awesome Inc. down in Lexington. They have a fellowship for local startups, and they've actually even helped us with the video stuff for free. So again, I don't think we spent a penny.
One of Wefunder's competing platforms was going to charge us a fee. I think it was a $10,000 fee, and they were going to give $5,000 of that back to us for.
Boo! Do we have any competitors? I don't know of any.
I mean, not anymore. Not over here. But before we landed on the right decision, we were like, it takes some bad decisions to get to the right one. And so we were told that we were going to be charged this fee, and then half of that fee was going to go back into ad spend. And then we started looking at some of these other companies that had raised on this platform in our niche, and they spent a large percentage of their total raise on ads to generate that money. And that's just a hamster wheel that we were determined not to get stuck on. We didn't spend a nickel on ads. Email. What do you mean? Yeah, so emails and social to get the ball rolling is how we got our investments started. The one expense that we had out of pocket was legal fees to make sure that all of our I's were dotted and T's were crossed. And so that having a good lawyer who understands all this and watching our back cost us a little, but we didn't spend any money on ads to generate the money that we raised.
Yeah, and just want to touch on that actually, because a couple of people have mentioned this now. And if you're not talking, if you go mute, that would be great. So one thing that I think this differentiates us at Wefunder maybe versus some other of our competitors is, we prefer it if companies are raising money without having to spend a ton of money on ads, right? Like that's not really what we want. If you're spending 20 cents on ads to raise $1 in investment volume, and then on top of that, the Wefunder fee, it starts to become a very, very expensive way to raise capital. I think the one exception to that is if there's a consumer-facing product or a product where if you can, raise capital and recruit investors, those investors might go on to become customers, and there's an LTV from customers there, and you get the dual benefit of the ad spend, both raising capital and then revenue down the line. then I think it can make a lot of sense. But it's just something to consider. You know, if you end up spending a bunch of money on ad spends as well as the fee, it becomes quite an expensive way to raise capital. So generally, we want to be working with companies that can raise capital without absolutely spamming people with ads and wasting a ton of money on ads. So that's super helpful perspectives on how much it costs. And yeah, from my take on the kind of more average side, having worked with a few hundred companies that Wefunder now, certainly legal fees up front, there might be some. We do have a template safe and convertible note contract. We use a YC post money safe, and Cooley did our convertible notes. So they're pretty, robust documents. And so some founders are kind of just relying on that and really not spending too much on legal fees. But yeah, always good to double check it if you have the bandwidth to do that. Usually, if a campaign is raising more than $250K, you will need to spend money on a financial review by an independent CPA. That might cost a few $1,000s. I think the range we've seen is like $1,000 to $7,000, depending on how complex the financials are. That is not an audit. It's cheaper and easier than audit, but that still is a cost that you would incur. And as I mentioned, if you're raising less than $250K, you don't need to spend that. We don't charge any fixed fees to launch a Wefunder campaign. So usually up front, it is pretty light from a cost perspective. I'm just going to go through 3 quick questions that people ask. So Annette asked, would love for you to touch on Alto IRA. I'm looking into how your partnership with them could help us boost our potential campaign with IRA investments. So Alto IRA, they're actually based in Nashville, where I live. Really cool company. So they allow investors to invest in companies on Wefunder out of their IRA accounts. And so in the checkout flow on Wefunder, an investor can check, I want to invest with an Alto IRA account, and then they go over and create an account on Alto. We don't have that be a disruption to the checkout flow. So we want to try to get people through and convert them to investors, but then they can set up an Alto IRA account to fund that investment later. So would highly recommend that. We've seen if people are investing out of their IRA, they might increase the amount they invest. So that's a great partnership we have. Alice asked, once funds are raised, are ongoing communications, etc., managed through Wefunder? What is that obligation long term? So so firstly, actually during the campaign, so I think Jim mentioned he was using the Wefunder updates tool to write updates. Also would highly obviously recommend having a sequence of emails that might go to your users. You can post on social, so you can manage communications during the campaign, both using the Wefunder updates tool and outside the platform. And then ongoing, these guys are relatively early, I guess, kind of raise money either currently or recently, and so probably haven't seen this so much. There is a legal requirement to do at least one annual report with the SEC the year after you conduct a regulation crowdfunding campaign. So we've built a tool at Wefunder that you can use to submit an annual report to the SEC that will come due in April. So that's the one legal requirement. We always recommend founders to be updating investors like every quarter, for example. I think as we said earlier, these can be very valuable customers or supporters for you in the business, help make an intro for you or share a job description or whatever you want them to do. They're obviously going to be more conducive to help you if you've done a great job of updating them on the investment. Every 3 months is what I would recommend. That's what our founder does. I haven't heard from founders that it's overwhelming. It's kind of really up to you on how you manage that. The founder of Cleveland Whiskey, who is also running another campaign on Wefunder right now. I saw he emailed his investors one time. I was one of them, so I got this email, and he basically said, I love hearing from you guys. I love hearing the feedback. I'm too busy running the company basically to respond to every email. But please keep sending me the feedback, and I love to read it. But just don't be offended if I don't respond to every message I receive. I thought that was a really good way of handling that. But generally speaking, I haven't really heard that being an issue from founders. And then, so Mike asked, are there sectors or industries more appropriate for a CF campaign? I think honestly, generally no. As Jessica mentioned, you might think consumer products or consumer-facing companies are the best fit, and if you're a B2B SaaS platform, then it wouldn't be a fit for you. That's definitely not the case. We've had Grow Guru is an ag tech SaaS company that recently raised 2 million. We've funded companies in the biotech sector, all over the map. So there's not really a kind of focus on any industry vertical. I do think if you're a consumer facing company with a big audience, that is slightly more in the sweet spot. One, because you can go to your customers and there's an additional large audience who hopefully they love the product and the company and they can be additional investors. So I think that might mean it helps you to raise the capital in the first place. And then if you're a consumer facing company, as Jim was mentioning, hopefully some of his Wefunder investors have become customers of Cornbread Hemp. So maybe you get a little bit more value out of that than if you're a B2B SaaS company. But even there, I think if maybe you're trying to sell into a certain enterprise customer and one of your investors is employed by or knows people at that enterprise customer and might be able to help make a warm intro for you. So even on the B2B side, I hope that this kind of crowdfunding model can help with customer acquisition. But so that was probably marginally the sweet spot on the B2C side, but certainly we've had many B2B companies that have raised 7 figures on Wefunder. So let's see. One other question that came up that I did want to touch on, I think Michael mentioned this right at the start. There's some new law changes that the FCC have approved recently. They're going to go live in February of next year. They're going to increase the maximum amount that a company can raise using regulation crowdfunding from 1.07 million, where it is right now, to 5 million. We're very, very excited about that. There's a bunch of other changes in there as well that are just going to make regulation crowdfunding work better. So we've already, as I mentioned, been growing a lot in 2020, but in 2021 we expect that growth to accelerate. So that's something we're really excited about, probably launching, going live in February. And we are at time. Any last comments from Jim, Jessica, or Charlie?
I had 2 private message questions that I'd like to just answer for the group in case anyone else has the same questions.
And just before you do that, so I can stay on. Hopefully, you guys on the panel can. If anyone needs to leave, we're at time. Feel free. But yeah, anyway, I can certainly stay on for a few minutes. Go ahead, Jessica.
We're going to go over to answer any kind of good questions that we got.
Yeah, and I'm happy to take any questions offline, but I do need to scoot. Thank you everybody for having us and including us in this conversation. It's really elevated our game and really appreciative to everyone at Wefunder and the Wefunder platform and everyone on the panel, Jessica and Charlie. It's great to be seen as y'all's peers in Louisville in this space. Just really means a lot. But I would stick around and answer questions, but I do have to go.
It's really nice for us to answer questions for me back when I was thinking about doing this. And I'm sure Jessica and I will gladly answer other people's questions anytime you come to us.
Thanks, Jim.
Thanks, guys.
So Jessica, go ahead with those 2 questions.
Yeah, so the first one was, can you elaborate more about digital marketing sooner before going into fundraising? I wish that I'd just been more vocal about it on my personal Facebook and LinkedIn channels, because we did have so many investors from my personal network. I wish that the first time they heard about it wasn't me launching the campaign, so that I could kind of have some build up to that, and leveraging our email list more. We have several pretty robust email lists that I did not tap into that I will now be tapping into now that we're extending the fund. So anything that you can do just to kind of educate people before the fund actually goes live, because there are so many people who are just familiar with the process, and it's a very intimidating process if they don't really understand it. So that's really what I meant about digital marketing, was just starting before we started. And then the second one was, you mentioned you had someone you used to help you with the pitch. Are you able to share their info? So I had a ton of people who helped me with this, but I would say the biggest one specifically to the pitch and the pitch deck was Jen Callahan with Livefire. She is a fantastic designer, helped me with my deck, but she was also the CMO for a startup previously. So she had gone through pitching, and so she let me pitch to her and gave me some really great feedback that we were then able to incorporate into the deck as well. So definitely her. And then Brad Puckett with Fingerframe Media is the one who did my video. I'll drop our Wefunder link in here. Definitely if you have a chance to check out the video, watch it. But that video has been really instrumental. I've been able to send just that video to people and then link them to the Wefunder when they wanted to learn more. So those would be the two people who really helped me the most with my Wefunder outside of my attorney, obviously, is Jen Callahan and Brad Puckett.
Someone asked a question privately, but I'll repeat this because I think it's a good one. Is there the option to have some kind of password protected option or kind of secrecy? To be honest, no. So because even if there wasn't a Wefunder side, everything needs to be filed with the SEC. The campaign page, like actually as a PDF, needs to be filed with the SEC. It's kind of interesting. It's interesting to see the SEC kind of try to wrap their heads around the regulations for kind of an online like crowdfunding platform. Some of the rules are kind of like, this doesn't really make sense for an online world. But so at the end of the day, honestly, if there's like things that you're kind of really sensitive about, then either you kind of don't talk about that stuff in the campaign. So on the financials, for example, you need high level P&L. You don't need like SKU level margins. So there's a level where you can obscure some stuff. But generally speaking, if you kind of are looking to be in stealth mode or don't want really people to learn about this, Wefunder is not a good option. Any other questions? All right. Michael, maybe back to you if you want to just wrap up.
Yeah, absolutely. And Annette Miller in the comments.
Sorry, Michael, I had a quick question, if that's okay.
Go ahead.
It's Craig here at MyGen from Scotland. Yeah, we've got quite a few, 65,000 clients in 125 countries at the moment. In fact, we're just going to top over 70,000 with a promotion we're running. We have an application, but we want to get investors to buy in for the business model it takes us onto. We have a US identity, but we're opening an office in Florida. We're supposed to do it this year, but next year. I guess the question, John, really is, how do we get our 65,000, 26,000 that are in South America to invest in us through Wefunder? Is that even possible?
Yeah, you can certainly have international investors invest. Regulation crowdfunding can only be, and Wefunder can only be used to fund US-based companies. Mm-hmm. So it would need to be the top company that's in the US. So I'm not sure if that's a fit, but if that is works, then you can have international investors in Wefunder campaigns.
Okay, super. Thank you very much. Very helpful.
Great question. Yeah, I just wanted to point out that Annette Miller makes a great point in the chat room and it goes back to what we were discussing about preparing your campaign before you launch. Unatonomy did 100K in their first 24 hours. And psychologically, what does that look like to you when you are looking at his campaign? Oh, there's something there. People are seeing it. People see the potential in it. It's definitely a psychological benefit to make sure you do your prep work. So yeah, great job on that, Charlie. But thank you all so much for oh, go ahead, Charlie, go ahead.
I was just going to add one thing, which is that people shouldn't be intimidated. Like, you have to have $100,000 lined up to have success or to make a Wefunder work for you. We'd heard, that's always a good thing to have some sort of like snowball effect, right? Honestly, though, we're only at 130 since then and now, and that was months ago. So it wasn't like it suddenly just, was an avalanche. But I think that was just a combination of all those relationships I've been building for 6 months coming in on the same day, and it worked really well. But I'm pretty sure, like, you can, I think you got to have a campaign that works really right for your startup, and just thinking you need to raise $1 million isn't the right way to look at this. Like, we want to raise somewhere between 200 and 250K on it. And that's exactly what we've done when you pair up the money we got outside of the Wefunder thing. So I think you have to be kind of strategic about really what you're trying to get out of it, and then build your marketing campaign and all your efforts of cultivating investors to really target that strategy.
I think that's great advice. Sometimes I will be chatting to a founder, they're pretty early stage. It's like, how much do you want to raise? It's like $1 million. It's like, why? Like, even if you could raise that, which you're probably not going to be able to do, then it's probably a bad idea for you to raise that much money, because you're giving up more equity than you need to at this stage, given the valuation you can command from investors, and you'll probably waste the money on, spending it in laying cement in the wrong direction because you haven't figured out the product market fit yet. So, and this kind of ties into a great question that Nishan asked, which is, what is the best time of a startup's journey to start engaging with Wefunder? I love this question, actually, because in the new world, post-February, the new rules, the max is 5 million. So we can go all the way through to, Series A, maybe part of a larger Series A. Modern Times is a brewery in San Diego that raised on a $250 million valuation. They didn't really need the $1 million that they raised in a couple of days quite as much, but they just thought it was really cool to have their customers own a piece of the brewery. So, we can go very, very late stage, but we also, the minimum is 50K. So for me, it's like a great way to do a friends and family round in a structured way. There's one line on the cap table. Everyone knows what they're getting. It's, streamlined because it's on the website that you can email in a compliant way to everyone and just have them invest through the platform, and you get them in front of Wefunder's investors. So all the way through from tinkering in a garage, kind of pre-launch, like 50K friends and family rounds, all the way through, we can facilitate. And I'll just say one more thing, and then I will kind of shut up. But big thanks to Jessica, Charlie, Jim as well for both taking their time on this panel and sharing with other founders that are considering this, but also taking a chance on regulation crowdfunding. This is still pretty new, still pretty nascent, and so. Thanks so much for the kind words about Wefunder today, and just good luck with the rest of you guys' campaigns. And then also want to give a shout out, I think she might have dropped off, but Mary Grace from the Render Capital team, that she's kind of works with Access Ventures, which is a nonprofit impact investing fund in Louisville. And if you don't know them, Bryce Butler and TJ.
Yeah, I'll add one thing about Render, because I get this question a lot, which is like, what do you have to do to qualify for that 20K for the Render add-on for your Wefunder campaign? The answer is nothing. There's no diligence or hoops to jump through or anything. It's just once you raise your first 20K and you're local to Louisville, they'll do it. Like, no questions asked. It's awesome.
Great point to add.
Yeah.
Well, thank you guys so much for joining us today, Jim, Charlie, Jessica, and Johnny. This has been a great conversation, and I love that we talked about the new changes to the SEC for 2021. That is absolutely game changing, and I'm glad that everyone that is here joining us today to witness all that, get prepared. This is some exciting stuff. But thank you all for joining us today. Again, if you liked this session, want to learn more about the Louisville ecosystem, follow our newsletter at amplifylouisville.com. If you missed if we didn't get to any of your questions, obviously email me at mike@amplifylouisville.com, and I'll work with the panel as well as Johnny is getting them answered. But otherwise, I'm gonna hit stop on